Welcome to True Finance, where your financial future begins with clarity and confidence. Welcome to our exploration of Rho, the often overlooked Greek that measures an option's sensitivity to changes in interest rates. This series will illuminate Rho's fundamentals, its significance in the broader context of options trading, and strategies to harness its impact. Rho quantifies how much the price of an option is expected to change with a 1 percentage point change in interest rates. While it may have a more subtle effect compared to other Greeks, Rho plays a crucial role in certain trading strategies and market conditions. Why does Rho matter? In environments of fluctuating interest rates, Rho becomes a pivotal factor for long-term options. As rates rise, the value of call options typically increases, reflecting the higher cost of carry, while the value of put options may decrease. Rho is most relevant for options with a longer time to expiration. These options are more exposed to the effects of interest rate changes over time, making Rho a critical consideration for strategic planning in long-term investments. The impact of Rho varies across different financial instruments. For instance, options on interest rate-sensitive assets like bonds can exhibit a more pronounced Rho effect, underscoring the importance of this Greek in certain sectors. Incorporating Rho into your trading strategy involves a keen understanding of the economic outlook. Traders anticipating changes in monetary policy or interest rate adjustments can position their portfolios to benefit from Rho's effects on option pricing. For example, in a rising interest rate environment, traders might favor long call positions on interest rate-sensitive assets, leveraging Rho to capture potential increases in option value. Effective portfolio management considers Rho's impact across different positions, especially in diversified portfolios with varying maturities and exposure to interest rate changes. Balancing Rho can help mitigate risks associated with unexpected rate movements. Advanced traders also monitor the overall Rho of their portfolio, adjusting their strategies to align with their interest rate outlook. This might involve using financial derivatives or fixed income instruments to hedge Rho exposure. Rho's significance extends beyond its basic definition, acting as a barometer for the economic environment's impact on options pricing. In a landscape where interest rates are dynamic, Rho provides insights into how these fluctuations can affect option valuations over time. For long-dated options, Rho becomes increasingly important. These options are more sensitive to changes in interest rates due to their extended time to expiration, making Rho a critical factor in their pricing and strategic positioning. One advanced strategy involves crafting a Rho-neutral portfolio, balancing positions to minimize sensitivity to interest rate changes. This approach requires a mix of long and short options, carefully selected across different assets to offset Rho exposure. In anticipation of central bank policy shifts, traders might adjust their portfolios to enhance Rho exposure. For example, ahead of expected rate hikes, increasing holdings in long calls on bond futures can exploit Rho's impact, as these options tend to gain value with rising rates. Hedging interest rate risk with options involves a keen understanding of Rho. Traders can use options with high Rho values as a hedge against portfolio positions that are negatively impacted by interest rate movements, such as fixed income investments. Another sophisticated application of Rho involves cross-market strategies. Traders might analyze Rho correlations between different asset classes, such as currencies and bonds, to identify hedging opportunities or arbitrage setups based on diverging interest rate paths. Diversifying a portfolio across assets with varying Rho sensitivities can help manage the overall impact of interest rate changes. This includes combining options on assets like equities, which are less sensitive to rates, with those on fixed income, where Rho plays a more significant role. Professional traders also consider the global interest rate environment, diversifying internationally to hedge against domestic rate volatility. Options on foreign assets can offer different Rho exposures, providing a hedge against localized interest rate movements. While Rho offers opportunities for strategic gains, it also presents challenges. Interest rate predictions are notoriously difficult, and unexpected rate movements can quickly erode the benefits of Rho-focused strategies. Effective Rho management thus requires not only a solid grasp of options theory, but also an acute awareness of economic indicators, central bank policies, and market sentiment. Continuous monitoring and flexibility in strategy are paramount. Achieving mastery in Rho strategy involves an intricate balance between economic foresight and tactical options trading. It's about predicting the unpredictable, navigating the ebb and flow of global interest rates with precision and strategic acumen. Expert traders leverage Rho not in isolation, but as part of a comprehensive analysis that includes delta, gamma, theta, and vega. This holistic approach ensures that interest rate strategies are robust, accounting for all dimensions of options sensitivity. Complex Rho-centric trades might involve leveraging exotic options, which have unique payoffs sensitive to interest rate changes. Structured products or options with barriers, lookbacks, or Asian features can offer tailored Rho exposures, aligning closely with specific market outlooks. In anticipation of central bank policy announcements, Rho-centric traders might deploy event-driven strategies. These involve positioning options portfolios to capitalize on expected volatility spikes or directional movements influenced by interest rate decisions. Mastery of Rho requires an adept understanding of global economic indicators and their potential impact on interest rates. Expert traders analyze employment data, inflation reports, and GDP growth rates, using these indicators to forecast shifts in central bank policies and adjust their Rho strategies accordingly. Utilizing interest rate derivatives, such as swaps and futures, in conjunction with options trading allows for sophisticated hedging and speculative strategies. These instruments can complement a Rho-focused options strategy, offering additional layers of risk management and profit potential. At the portfolio level, diversification across different interest rate environments maximizes the efficacy of Rho strategies. By allocating capital to options in markets with divergent rate outlooks, traders can hedge against localized economic risks. Risk management in Rho-centric trading involves dynamic adjustments. As economic outlooks shift, so too must the portfolio's Rho exposure. This may involve rolling options to different expirations or strikes, or rebalancing between calls and puts to maintain the desired interest rate sensitivity. The primary challenge in Rho trading lies in its dependency on external economic factors, which can be volatile and unpredictable. Expert traders remain vigilant, ready to pivot their strategies in response to new economic data or central bank communications. Furthermore, the complexity of accurately modeling Rho and its interplay with other Greeks requires advanced mathematical tools and software. Continuous learning and adaptation, supported by cutting-edge technology, are indispensable for success. Rho mastery transforms interest rate changes from a source of risk into a strategic opportunity. Through expert-level strategies and an unwavering focus on global economic trends, traders can navigate the complexities of the options market with unparalleled skill. This concludes our deep dive into Rho and its place in the pantheon of options trading. Your journey to mastery doesn't end here. Continue to explore, innovate, and refine your strategies. For more insights into the art and science of trading, make sure you're subscribed to our channel.
As we close today's journey through the landscape of financial wisdom, we extend our heartfelt thanks to you, our dedicated viewers, for joining us. Please like and subscribe so that we may continue to bring you the best financial education.